Good morning, everyone. My name is Alan Feld. I'm the managing partner of Vintage Investment Partners. We're a fund of funds, secondary fund and late-stage investment group based out of Israel. We manage about $1 billion investing in Israeli venture and European and U.S. venture as well. I'm going to have each one of our panel members introduce themselves, and then the agenda is Eliav will do a presentation about how he uses machine technology in investment decisions, and we'll have a discussion about that afterward. Now, discussion is about human versus machine. We unfortunately got the slot right before lunch. Machines don't get hungry, humans do. So we will do our best to stay on time. And we do want to make this interactive. So we'll hopefully after the presentation and discussion amongst us, we would like to open up the floor to questions should anybody have any questions or comments. So without further ado, if I can just ask each member of the panel to present themselves. Eliav, please.
Okay. Eliav Alaluf, I'm based in Tel Aviv, partner at Follow the Seed. We're a very interesting investment company that invests in irrational ventures.
Shelley, please.
Hi, my name is Shelley Hod Moyal. I'm one of the founding partners of iAngels. iAngels is an equity crowdfunding platform that allows private investors from all over the world, from Australia, also to invest in high-tech startups in Israel in a co-investment model whereby we allow you to co-invest with the leading angel investors and venture capital firms in Israel under the same terms.
Renata Cooper, founder, CEO of Forming Circles Global. I'm an entrepreneur, angel investor, and a philanthropist. Forming Circles Global is a unique angel investment company, and we predominantly invest in female-led technology startups. Apart from seed funding and impact marketing loans, we also created, through Forming Circle, an amplifying platform, and we use social media a lot to connect with the everyday user, which ultimately is the customer of our startup.
Matthew, please.
Hi, I'm Matthew Koettinger. I'm one of the managing partners from Telstra Ventures. Telstra Ventures started about 4 years ago. We're a very active investor at the moment. We've made 24 investments in the last sort of 3.5 years. Out of those, there's one Israeli company, 10 in the US, 9 in Australia, and 4 in Asia. We are typically investing in later stage sort of growth companies. And all of our investments need to have Telstra as an executive sponsor, in order to take those opportunities to market. Our team is based in Australia, Silicon Valley, and China.
So Eliav, tell us how machines are going to help us become better investors. You're on.
Okay. About a year ago, I gave a speech, lecture to 400 business entrepreneurs in Tel Aviv, and I asked them, before I began the lecture, I asked them whether they like pizza. You guys like pizza? Yeah, everybody likes pizza. So I asked them, what's the single most important thing about your pizza? And some said the dough. It has to be thick pan or thin pan. It has to be, the cheese has to be great, the extras, the sauce, etc. Sorry, I'm doing this before lunch. And then I told them, okay, I'm going to order a pizza for you. Who should I call? And they said, Domino's. I said, Domino's Pizza? Is that the best tasting pizza? And they said, no. Is it the cheapest? I said, no. So why would you have it? And they said, I don't know, because it's convenient. I said, it's the middle of Tel Aviv. You can have, there's like 20 pizza joints around you. Why would you choose Domino's? Each and every one of those pizza joints provides a better pizza experience than Domino's, and you still choose Domino's. They didn't have an answer. Now, that's the stuff they don't teach you in business school, right? In business school, they teach you Michael Porter, and they tell you that you have to have a competitive advantage. You have to be the best at what you do or the cheapest. But in reality, most of the products that we buy are not the best. right? The vodka Absolute is probably not your favorite vodka. Domino's Pizza is probably not the best pizza you can think of. IKEA don't make the best furniture or the cheapest furniture. McDonald's is probably not the best tasting burger. And Starbucks coffee is it the best coffee? No. So, yeah. We tend to see, people tend to say, okay, it's branding. So, but how come I choose the wrong product for me? Not the best product. If we're not stupid, we're not stupid. We're just being irrational. So, and the thing about irrationality, besides that, Dan Ariely wrote great books about it, and Daniel Kahneman won a Nobel Prize for it, is that what brings it for us is that a lot of investment companies are trying their best to sort of try to identify the next big hits by looking at data, right? They're looking at historical data, the current data, and they're trying to predict winners. How well are they doing? Well, if you look at this table, the source is CB Insights from March to 2015. And you see the number of total investment unicorns. Unicorns is a private startup worth over $1 billion. So you see, I just selected the group, which are very, very respectable companies. Intel Capital, Index Ventures, Qualcomm, Google Ventures, etc. How many of those were early stage investors? How many of these VCs managed to identify those big hits on either seed round or A round? How many do you think? Well, look at Intel Capital, 0. Index Ventures, 0. Redpoint, 0. Qualcomm Ventures, 0. Institutional Partners, 0. Google Ventures, that's the guys that know all the data about you, right? They read your email. They know when you buy stuff, right? They know everything about you. 0. New Enterprise Associates, 0. Kleiner Perkins, the great Kleiner Perkins, 0. Now, these are some of the best guys, the smartest guys in the world. They have the best brands. They have lots of capitals and connections. How come they can't seem to pick the winners early on? Because they have a deficiency, right? It's not their fault. They don't have the right technology. It's like the difference is when you have a doctor with an MRI scanner or without, a doctor with a Röntgen machine or without, a doctor with a blood test or without. It's no matter how good the doctor is, he still needs the diagnostic tool. Now, that deficiency that they're lacking, I mean, they have data. They have analysts. So what's missing there? What's missing is context. And context is to explain context, think of your favorite cafe, your favorite coffee shop. What are you buying there? How much money are you willing to spend? Who are you going there with? And how long do you intend to stay? Now, in every different hour of the day, if it's Friday morning or Friday for lunch or Friday evening or Saturday morning, in every instance, you come with different people. You spend a different amount. You stay different times. So if you're the coffee shop machine algorithm, what will you offer the customer? Obviously, it has to do with the context of the time. Now, a startup company is not a coffee shop, right? It's very complicated. Too many variables that you can compute, and what happens in the past does not reflect the future. People change. The behavior change. So, what can you do to solve this problem? How can you get context? Maybe we can ask people. Do you know what this is? Anybody knows what this is? Of course you do. It's Viagra pill. Um, how many people use it? How many people know anybody that uses it? Right? So it's when you ask people inconvenient questions, they block out. So Pfizer sells about $2 billion a year worth of Viagra, and still you don't know anybody that buys them. That's very weird, right? Other thing is static data. Google has a lot of that, right? They have lots of data. But think of this. How many of you know someone or some people that are just like you? They're the same age, the same physical build, the same marital status, the same economical status, etc. They live in the same place, but they buy different things. You know a lot of them, actually. So the fact that you know who I am, where I grew up with, or what's my education doesn't tell you anything about what I'm going to buy or what I'm going to do. So the only really reliable source of information for context, for identifying really insightful information about startup is user activity. And that means that you, I mean, one of the questions that we look at is, for example, how many? 1 minute? Okay. Oh, okay. I'll do it real quick. Now, how many of you have looked at your phone before you brushed your teeth in the morning? Most of you. So whatever application that you've used, you're addicted to. That's an addict behavior, right? The word user. There are only 2 industries in the world that use, they call their customer users. One is the high-tech industry, and the other one is drug dealers, right? Probably not a coincidence. So what we're really doing is, sorry, pressing the wrong button. Okay, so what we're doing with Follow the Seed, we've developed an algorithm that really detects irrational behavior. Any type of behavior by consumers that is obsessive, compulsive, or addictive, we detect. Does it mean that we can replace the investors? Answer is absolutely no. The same way that MRI does not replace the doctor, right? But it does give you the ability to scan thousands on tens of thousands of deals every year, especially those out of your normal circles, cold calls, unsolicited offers, and give the opportunity for the investment firm to focus its most precious capital, the human analyst, on a few selected deals that actually pass the benchmark. Thank you. Thank you very much.
Thank you, Eliav. Thank you, Eliav. Shelley, use of technology in your decision making. How do you use technology, data, and sort of thoughts about what Eliav's presented?
So at iAngels, when we invest and make investment decisions, we really use technology across the board. In pre-investment in the due diligence process, using the internet obviously is not new, but we're working and experimenting with many tools online. We actually collect data on the startups that we invest in, so at a later stage we're going to be able to benchmark and detect certain trends. We use third-party research like CB Insights and Thomson Reuters, which enable us to crunch a lot of data and gather insights on valuations. We even use startups today, and this kind of goes to what Eliav talked about, but today there are several startups like SimilarWeb and BI Science, one of our portfolio companies, and Compass, which actually enable us to look at private companies and look at kind of the traffic that's done online and analyze their online presence and user usage. So we definitely see kind of technologies that are supporting the investment process growing. Now, post-investment, we leverage technology to present our investment opportunities to our community of investors that registered on iangels.co, and really enable our investors to kind of gather these insights and make investment decisions based on the information there. And by the way, we also use technology to help our portfolio companies. Recently, one of our portfolio companies, Silo, which is a social investing network that allows you to tap your business network and make wishes. So recently, one of our portfolio companies, Hola, which is a very successful VPN network with 54 million users, asked its investors to find a very specific executive at Google. And what we did is we sent out a wish on this social network. And we actually found that exact executive at Google and connected our portfolio company to him. And ever since that day, he thanks us every month for making that connection. So we really use kind of technology across the board.
Renata, as an entrepreneur, as a seed investor, so much of it, I guess there's a certain point you can take technology. A lot of it is people, right? And so talk to us is the importance of entrepreneur and frankly, entrepreneurs' ability to change the model at any given time.
Yes. As an intuitive investor in early stage companies, seed funding, I mean, we have to kind of look at it, what kind of investment it is. Seed funding, by its nature, is a high-risk investment. So I think applying technology, and I guess the product is really, really early. So what you see right at the beginning is definitely not the company and the product that you will see at the exit. Look, assessing the company for seed funding, it's more an art rather than science. So me as an investor that invests predominantly in women, I'm looking for the human characteristics, which is, what you need right at the beginning is the resilience, ability to learn quickly, to be agile, to draw on resources that you knew that didn't exist, and, really basically to survive. So, luckily we're not the pizza place. So generally the startups that come my way, they go through recommended channels such as Heads Over Heels, Springboard, Scale Investors. So my assumption, and just have to explain to you that Forming Circles Global is self-funded. So all funding that goes through the startups comes through me. So I guess if you're exposed to the investment greatly, not just as a part of the group, you make very different assumptions, and you are very much looking at, the product and the founder and the team. So the human element is really great.
Thank you. Matthew, you come from a very technology-focused place. What have you done? Have you developed any technologies that enable you to do your investing more effectively?
Yeah, so we use a combination of more old school techniques, but also new innovations as well. So we use a number of different services that actually monitor growth activity on the internet. So number of views of particular websites, internet traffic, but even LinkedIn profiles. So when a company is actually growing its headcount significantly over time, it basically alerts these companies to us every day. And we use that in certain areas that are of interest to us to find and source investment opportunities. One of the, there's an old saying in venture capital, which is that the best opportunities usually come from the calls that you make as opposed to the calls that you take. So we do take a very active, view in our deal sourcing. So we spend a lot of time across our team, contacting companies, researching different areas, and we also use a lot of tools, that basically cover different sectors, databases, and so forth that will help us, analyze industries and so forth very efficiently. We also have developed a lot of, complicated models around valuation and all of those kind of things as well as, maintaining a detailed database of all of the portfolio companies that we see, which, has got, thousands of companies in it now and lots of data on those companies' performance. So we embrace all of those things.
I've been doing this for a long time, for over 20 years, and I think I have yet to see a company whose business plan and seed is what they actually do in the end, right? And the ability of a entrepreneur to pivot is crucial. So when you look at companies, and Ellie, up to you, when you look at this disruption and you look at this algorithm, you've also got to assume that that may not be the business you're investing in. So as for this audience, when they meet a seed entrepreneur, or an entrepreneur at the seed stage, how are they going to make the decision? Is this the business? And they probably will not. That will not be the business. How will you then decide based on that?
Well, I have the speaker here. For us, the way we process it, we let every startup that wants to receive investment from us install a small SDK, like 9 lines of code, and that continuously sends information automatically to a server that is based on Amazon Cloud, and we don't actively pursue it. We get alerts whenever the behavior pattern shows that they managed to create a crowd of raving fans. They actually made 20, 30, 40% of their users became really, really enthusiastic about their product. Now, I don't care what the product is. I only care about the category and the behavior of the user and the retention rates. If I have that, once I get the ping, there's a human element that comes in to the equation to look at the due diligence and the team and the idea and the market. But once the company is at that point, I think they hit the jackpot.
So let me ask you, Shelley, the human element that Eliyahu's referring to, where is that on your priority list? And when you look at a seed investment, what are your sort of top 3 things that you're looking at making the decision?
So first of all, I agree 100%. I think technology takes us to an extent and moves us forward. As iAngels, we promise our investors to invest with influence, and part of that is certainly analytics, which are getting better and better. But at the end of the day, as an equity crowdfunding platform, just like traditional investments or traditional investors, it's not just about how you're collecting the data, but it's about what you do with it. And I'm not sure that will ever be replaced by technology. And I can give you an example. We, right now at iAngels, we use an algorithmic assessment tool to assess our entrepreneurs and learn kind of about the way they think and the way they interact and certain personality traits. But it doesn't replace our actual face-to-face meeting with them. To the contrary, it raises flags and it points out issues that we want to investigate and that we actually use to focus on in our reference checking. Now, in venture capital, I would say, in contrast to public markets, which are much more efficient from a pricing perspective, I think choosing the right companies, there's a very strong element here to access, to negotiation, and to judgment. And I think that so long as these markets, these private markets, are not tradable, the need for professional and active management to really vet the companies, vet the entrepreneurs, vet the technologies is going to be required to really generate returns.
Matthew, there's a debate always about the role of a venture capitalist. Is it to pick the winners or to help build them? What are your criteria in picking them, and where are you on that scale of the role of venture capitalists?
Yeah, so I think you have to pick the winners. I think that's a really important category. As a corporate investor, there is a really important criteria for us to basically work with all of our portfolio companies to leverage Telstra's assets. So we do try and work very closely with our portfolio companies where Telstra can be a go-to-market channel. And when it works, it's incredibly powerful. Some of our portfolio companies have literally generated tens of millions of dollars of revenue through Telstra as a go-to-market partner. So when it works, it's great. It doesn't always work, but it's something that we really try very hard to make happen. On the point of relationships, I mean, I think that there is sort of a really important aspect. I think the best entrepreneurs can get money from anywhere. You know, they're not sort of, you know, writing business plans and, you know, sending them to firms. So I think one thing that's also really, really critical is, you know, having a good relationship, you know, with the entrepreneurs, with other co-investors, and really getting into the deal flow, you know, in that way, and really showing the entrepreneurs how we're actually going to help them, as opposed to just writing a check. So I think that's sort of another important differentiator that is important. But at the end of the day, you've got to back the best possible people.
Yeah, and Renata, the you know, the selection we talked, as Matthew indicated, selection is obviously crucial. But because these companies pivot so much, how do you work with the entrepreneur? What's your added value vis-a-vis the entrepreneur? And what's the implications for people in this audience who want to invest in seed companies? What do they need to know about the impact of that?
As I mentioned, it's a very high-risk investment, and you know, 1 out of 3, you know, the percentage of companies that actually don't make it to Series A is really high. So if they, you know, cash is king. If they run out of cash, basically they can't trade any, they can't grow. It's interesting what you said about the best entrepreneurs get the funding from anywhere. I think it takes a substantial time for even the best entrepreneurs to raise funding. And, you know, I see my founders, you know, extending themselves and, you know, spending a lot of time trying to get cash, valuable time they can spend on developing a product. So I think it's kind of the chicken and egg scenario about, you know, each level of growth that requires more funding, and it's about where you put your energy through. So what we do through FCG, we not only offer the seed funding, we also offer additional funding. So our work, it's kind of more like a boutique investment platform. And I created I spent a lot of time creating the, and money to create the amplifying platform where we connect with the everyday person, which ultimately is the potential user of our startup. So, you know, seed funding is a very difficult stage of the startup, and you know, we see them everywhere, not developing. So, and I actually just kind of want to go onto your model about this erratic behaviour, and the raving fans. And look, we use social media a lot, and I use social media a lot in developing my personal brand and the Forming Circles global brand. And I kind of sort of reflect on the amount of data collected through algorithms and so on. And I think at this stage we collect a lot of data which we don't know what to do with it. And I just kind of have this analogy about if I, you know, love Ferrari and I share it 100 times a day, that a circle of people, they also like Ferrari, and none of us can afford the Ferrari. So what's happening? You're really sharing a product within your network circles that no one can buy. So while it seems like an amazing ripple effect, I think what the algorithm should really assess is the buying power of your network. So if you have $100 in your pocket and you're in a, you know, massive marketplace, you can only spend $100 that you've got. So if your network's worth $20,000 and you're sharing Ferraris, I don't think anyone can afford it. So I think people have to really rethink how the data works.
I can elaborate more on the system.
Yeah,
it's not about social media actually. It's about say for example that you have you know, a financial application that allows you to trade stocks. Yeah. If I can see that you're using it as soon as you wake up, using it 20 times a day, and there are you know, the 40% of the people who are using this application are just the same. What does it tell you? It's a fantastic application.
Oh, sure. I mean,
so
where do you see the erratic behavior?
Irrational behavior means like things that you're using excessively, like you don't make the logical decision. I'll give you an example. One of my friends you know, he loves Apple. He loves Apple products. Anybody else here loves them? No. One maybe. Anyway, we had the discussion about what's the best laptop and what's the best phone and what's the best tablet, and he said, listen, no matter what you tell me, an Android device will not enter in my house. So what do you mean? It's like a principle, right? It's not a rational decision. And the minute your brand, the minute your product reaches this level, that means you can extract a premium, no matter what you sell, even though you're not selling the best product. And that's the idea behind the raving fans. That's what I'm looking for.
Yeah, sure.
No,
Interesting idea. I'd like to open up open it up to questions from the audience. Anyone with a question, comment? Yes, sir.
If you're looking at a seed stage investment, how do you get the advance? Let's say it's no longer a seed investment, it's a much more advanced stage, isn't it?
So the question is, just for those who didn't hear, if you're investing in seed stages, how will the algorithm really help you? Because the types of things that you're discussing are more advanced. I assume when the company's got a product and it's out already in the market.
Yeah, the name of the venture fund is Follow the Seed. It's the next step after the seed. We invest typically post seed and before the A round. We normally do it when you have a product that we can examine. It could be a product with a few as 1,000 users, but still we need a product that we can examine.
Any additional questions? No? Yes, ma'am, in the back, in the middle there, sir.
In the private equity space, organizations like GH Smart,
Can you stand up and speak up, please? So I think the question was, you saw this happen in the private equity space. Do you see this happening in the seed space generally? Did I understand your question generally? Okay. Maybe
So-
Shelley, you want to take that?
So I can, first of all, I can comment on iAngels, and I can tell you that we spend a lot of time on analyzing the team and the entrepreneurs that we invest in. As mentioned before, leveraging technology and also leveraging the internet. Today, you have, LinkedIn is very effective in, collecting some very important data, which in the past you couldn't know about a person, and establishing kind of credibility and online presence, as well as reference checking. Today, you can use technologies for background checks, credit checks, reputational checks, and I actually do see investors paying more and more attention to these technologies and recognizing the importance of investing in the right people.
I'm going to exercise the chairman's prerogative and go off topic for a second. And an issue that unfortunately machines cannot solve. There are not enough startups started by women who are getting funding.
That's true.
Shelley and Renata, how do we solve that problem?
Wow, what a loaded question.
I can have my view on that. Look, I think we have a pretty sophisticated audience here, so I don't need to go into the statistics of the fact that, there's underrepresentation of women on boards and startup founders, investors, etc. And which makes investing in women quite an interesting topic for me. I'm passionate about financial empowerment of women. And I think, we can't just look at the society and say it's just kind of the guy's fault or is that sort of fault. 5 years ago when when we sold one of our technology startups, then I decided that I will become angel investor myself. And I put it out on the Facebook saying, I'm an angel investor, I'm looking for startups. Women weren't educated. They didn't know startup wasn't the buzzword. Entrepreneur, anywhere in Australia, entrepreneur wasn't the buzzword that it is now. The funding was not available. So I think for a couple of years there was this journey of educating women that equity funding is not a loan, that they have to repay, and they're just worrying about how they repay it. So I think generally women are risk averse, and in Australia women are even more risk averse, which when you actually have women coming forward looking for funding, in my heart there's an assumption that these women are like the women warriors. They really believe in their ideas, they're really passionate, they have know-how. So
I think they need a role model. They need somebody who's successful.
That's exactly right. And we are underrepresented in many spaces, so we just need patience, and we need those unicorns, the success stories to come, and investing is the 5 to 10 year.
And Shelley, in 30 seconds,
Yeah,
can
sure.
you just add something to that?
Okay, I just wanted to say that, as a woman entrepreneur in the last 2 years, I think that one of the most important things is to really raise awareness and to empower women. I think that the investors that we've come across many times, talk about, the fact that it's refreshing to see a woman, but I feel that women are still in a disadvantage when they go out fundraising. And we see it all the time. In fact, iAngels, which were not an equity crowdfunding that necessarily focuses on women, we really kind of evaluate opportunities just from a returns perspective. We are actually the investment group that has invested in the most amount of female entrepreneurs in Israel, and I think that says a lot, and that it's important for society to take it and to be aware of that and to really kind of make a push to bring in more women.
So I want to thank our panelists. Thank you very much, Eliav. Thank you for the presentation. And enjoy lunch, everyone. The lunch is upstairs.
Until 2:05.
Upstairs until 2:05, and then we're meeting back here sharp at 2:05. Thank you very much, everyone.